Welcome back to Instables, everyone. So I'm going to go with you guys on the S&P 500. Again, this is the SPY. Now, I'm going to go with you guys again. We did have Fed minutes this last Wednesday. We had a spike, we had a slight pullback, we had a retest, and then we did rally for the rest of the week. So our question is, are we going to continue on with this rally? I'm going to go over the daily time frames so you guys can see the larger time frames and exactly what has to happen for us to continue here. Now, before I jump into this, all I ask in return for all of this is you smash that like button and hit subscribe if you want to see more chart updates every single day that I mentioned throughout the week. And if you guys are day traders or you guys are looking for intraday perspective breakouts, go to instables.com in the description below and you will never miss a breakout alert today again. So let's jump into this one. So jumping into the daily chart with you guys here on the SPY, as you guys can see, we have been tracking the upper end and the lower end of our channel here to see if we can have a bounce off of. And as you guys can see on Monday, we did have our hammer candle coming out that we did mention, and that was a lot of rejection to the downside. And then on Wednesday, we got another hammer candle coming out. We did mention if we had a neutral Fed minutes, then we could have a possible continuation on higher because we had two hammer candles that we were sitting on the lower end of our channel as we were breaking out of our channel that we have been tracking here on this break. And as you guys can see, we did break it, we did break above it, and we did continue on higher, and that is exactly why we did break out. A lot of people are curious why exactly technically we would have broken out. Why didn't we continue on with that rally to the downside? We did have a 7-week rally to the downside. We did test the lower end of our channel, and then we got those hammer candles coming out, showing us that large rejection to the downside. Again, hammer candles very much represent a large rejection of sellers to the downside and a strong amount of buyers pushing to the upside. And as we were leading into Fed minutes, we were looking for that digestion to break out of our channel here. And sure enough, we did. We broke above our channel, and we did continue on higher here. And now we are looking for our next indicator to continue on higher here. As you guys can see, again, we don't have a ton of volume that has been coming in. We have some volume, but not exactly a large amount. Now, the volume can come in late, so it doesn't necessarily have to come in now. We could totally get that volume coming in this week. And as you guys can see here on the RSI, we do have our RSI above the median of our MACD. So if we do continue on above the median of our MACD, then we could assume that we could continue on higher here. And looking at our MACD here, as you guys can see, we do have our email lines that we have been tracking. We were looking to see if we can cross above. We did mention that we were at the closest point that we have ever been to crossing above our email lines, and that's exactly what did happen. We did cross above. We got our increase in buy pressure from Wednesday going into Thursday. We did mention that we did need that confirmation, and then I did have that video on confirmation on that bounce. Now looking to see if we can continue here. As you guys can see, we do have our 20 below our 50. Again, 20 below our 50 does show us that we still could continue on lower. As you guys can see, we had a previous bounce and a rally to the upside, a large rejection, and that was the beginning of our 7-week rally to the downside. Again, the 4th largest sell-off that we've had here in the market. So again, on this bounce that we did have, as you guys can see, we did have our 20 below our 50. We still continued on higher, even with our 20 not crossing above our 50 quite yet. So we could still continue on higher here. So we have one key level that we did break slightly above going to extended hours here at 415. If we can hold 415, then we could be testing the lower end of our 50-day moving average. And if we did get rejected here at our 50-day moving average, I would be looking for that retest, possibly here at 415, or we could have a stronger pullback on the upper end of our 20-day moving average to continue on higher. So we'll be looking to see if we can get our 20 to start to curl up and then cross back over our 50 ultimately to get that stronger push and to possibly test the upper end of our channel. Now, as far as a continuation on higher, we do need to break above this channel, and we need to get a retest, in my opinion. If we do want to break above this channel, we want to retest and then continue on higher. So that would be the stronger move to the upside. But again, retesting after this bounce that we had off of the lower end of our channel and out of our channel that we did have this week is exactly what we're looking for. Again, retesting is going to be the healthier move. If we do chase this rally to the upside, then we are going to be leading into our 50-day moving average. So I definitely would be careful, and watching our volume this week will be very key. So we're going to see if we do continue to respect our 20-day moving average now that we are finally above it. Again, we have been looking to see if we can break above our 20-day moving average throughout the duration of this pullback, and now we are finally breaking above it. So we're going to be looking to see if we can respect it and continue on higher here. Now we are leading to CPI next week, and then the following week we have our 3rd rate hike, which is our 2nd 50-point base rate hike. So we'll see exactly how the market reacts if we do get a digest and possibly consolidate for a continuation on higher, or possibly consolidate for a continuation on lower and retest our lower end of our channel again. So we'll see exactly how this plays out. But again, looking for that retest would be the stronger move here after this rally that we did get. Now, to recap on our Bollinger Bands, again, this is representing compression and decompression. As you guys can see, we had our Bollinger Bands pointing down. We did have that continuation on lower. We were looking to see if we can get a bounce here on our Bollinger Band. As you guys can see, we are getting a slight bounce here, showing us that we are trying to find a bottom here on the lower end of our channel. So that is good for a possible continuation on higher, but we do have the upper end of our Bollinger Band that is still pointing lower. So that does show us that we could possibly have more consolidation, possibly either squeeze higher or squeeze lower. So again, like I said, looking for that retest, or if we do get our Bollinger Band to start pointing up, then that would show us that rally and continuation to the upside. So we'll keep an eye on our Bollinger Band, continue to keep an eye on the upper end of our Bollinger Band to see if we do decompress to the upside, just like we did decompress to the downside here. Now we have a few levels that we're looking at here. We do have our 415 level that we have been watching. We did continue on above it going to extended hours. We're going to be looking to see if we do hold that going into pre-market, if we do have a strong pullback, if we do get a possible wick to the upside by continuing on higher going into extended hours on Friday, and then having a pullback into pre-market tomorrow. If we do have a continuation lower below our 415 level, then we could be careful from there, and we would be looking for that possible retest. However, if we do hold 415, again, we will be looking for that test on the lower end of our 50-day moving average, which is our red line here. So we have 415, and then we have 405 if we do continue on lower. And if we do continue on higher, we do want to see if we can break above our 50-day moving average. So we're going to keep an eye on these three levels, again, our 415, 405, and then the lower end of our 50-day moving average. So this is intraday. As far as a swing, I definitely would be careful. Again, our swing was when we broke above our channel here. As far as chasing into this, that's totally up to you. We could squeeze to the upside, or we could possibly even retest, since we don't have as much volume as we were looking for to have that major spike. So we'll keep an eye on our volume this week to see if we do continue on with more buy volume, and if we do continue on with that buy pressure to the upside. Again, our buy pressure here does show us that we are increasing in buy pressure. We do not have that white shaded line coming in yet that we do have when we shift in momentum. So we're going to be looking for that possible increase in buy pressure, or if we do get a white shaded line, we are going to be looking for that possible retest. Now, as far as which momentum we're leading into, we do have China's lockdowns that have been decreasing. There's a lot of good news that China has been giving. They said that this round of COVID is definitely not the previous round of COVID. So that shows that there's not as many cases as they did expect. So that could be a de-escalation from China's COVID lockdown, which was a lot of fear here in the market. And then Putin seems to be more open to possibly talking to Ukraine and maybe de-escalating. We're going to keep an eye on that news to see if Putin does continue on with that news. And again, all of you instables that come over from the room and support the channel every single day, I appreciate every one of you guys. I hope you guys do have a nice rest of your 3-day weekend. We're going to continue to go at it, take what the market gives us, and see exactly how this momentum does play out. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.